For the next hour, you'll be leaving the Show Me state and entering the Show Me the Money state. So stop what you're doing, grab a pen, and get ready to learn. Randy and Jake Floyd of Floyd Financial Group will be your guides for straight talk and honest answers about living the life you deserve in retirement. So prepare to be empowered. Now, here are your Show Me the Money hosts, Randy Floyd, Jake Floyd, and Jeff Shade.
Good morning. Thank you so much. Welcome to Show Me the Money, the radio show that gives you the straight talk and honest answers you need to help you reach your wealth management and retirement goals through smart investing and careful planning. On today's show, we're going to be talking about what today's economic headlines mean for your retirement. Also, spring cleaning your finances. We'll also discuss 5 smart strategies to create your retirement paycheck without the stress. And finally, estate planning checklist, 5 tasks to prioritize to make things easier for your family. My name's Jeff Shade. As always, I am just here to ask the questions, but the words of wisdom and solid advice, they come from Randy and Jake Floyd, Floyd Financial Group. I will start with you, Randy. How you doing this fine morning?
Really great, Jeff. We had a great bicycle ride this morning, so it's all good.
I am glad to hear that. And Jake, how are you doing?
Randy's already been up for 8 hours or something like that at this point. So.
This is midday for him.
No, I'm doing well, Jeff. Thanks for asking.
I'm glad to hear that. Daylight savings time, we're back on that. How do you guys feel about that? There's a lot of controversy about whether we should have it or not. I don't quite understand it completely. Explain it to me.
I think we should abolish daylight savings time because it's a giant pain in the butt. I don't see the purpose.
I have a different opinion. So right here in the middle of the summer,
right
in June, it's daylight at 5:15. And it's not dark till 9:30, and I love that.
Well, you get up at 4:30. I'm sure you do. You know, the rest of us normal people, we don't like it because of the clock switch, or at least personally, it takes me a week or two to get used to the clock switch, and then we have to do it twice a year, and I just don't understand the purpose of it because people are like, well, it's farmers. You know, farmers needed to change the time to get up earlier. I mean, you changing the numerical value on the clock is not going to change when that mama cow is going to have babies.
You're right.
That is not going to change a dadgum thing. So I am for abolishing, obliterating, and getting totally rid of daylight savings altogether.
Well, I always thought it was because then farmers could see to go out and work in the fields and so forth, but you've got headlights. I'm with you.
I'll tell you guys,
yeah.
The great enlightener here.
All right.
So here it is. So during the summer, when kids are out of school and all that, it allows parents to come home from work and still have some daylight hours to play with their kids before they put them to bed.
And so in the winter, they don't care about that, apparently.
That's true.
No,
because when I get home at 4:30 on December 21st, it's pitch black outside.
That's true.
Well, I guess we can agree to disagree.
Yeah.
And you're within striking distance, sir. I'll remind you of that.
Well, I don't think we're going to change it right here, but still it is controversial. You spring ahead, you lose an hour, and I'm with you, Jake. It takes probably a week or two in order to get used to it. I just do not see the purpose of it, but nevertheless, we're not here to decide that. What we are here to talk about is what's happening in the world today and to help people get to and through retirement. So let's start in with that. A lot going on in the world today, Randy. Every week we hear about inflation, interest rates, Social Security concerns, and market volatility. For people approaching retirement or already retired, it can feel overwhelming. And today I'd like to break down what the headlines really mean for their financial future. When you look at the financial headlines right now, Randy, what are the biggest things that retirees and pre-retirees should actually be paying attention to? There's a lot going on in the world.
Yeah, everybody, it seems like today ends up watching a little bit of YouTube video, right? First thing is you probably need to flush most all of that. In fact, just yesterday, my wife was looking at something. She said, "Now look what this guy said." Da, 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 da. I said, "Well, give me the source on that." So we looked at the bottom, and it was Red Dog or somebody that don't know. So I said, "Well, you got to be careful who you listen to," and that's true because the media itself is not reliable at all. Really, you need to be able to get underneath the issues and look a little for yourself, but. Really, the biggest things today, I guess, everybody's still concerned about inflation, and rightfully so. We've had a very inflationary environment looking back over our shoulder. Things are a little bit better today. I think interest rates are starting to come down. They had been high enough to where it kind of made sense for people to have CDs and money market accounts for a while. So now they're starting to come down. And we got Kevin Warsh. Yes, it is Warsh, W-A-R-S-H. I'm not saying it like a hillbilly, right? I am a hillbilly, but anyway, it is Kevin Warsh. He's going to probably be a little softer on interest rates.
Yeah.
Healthcare's out of control, as we know, and broken. I think today, too, and it's the age-old question we talk about all the time here, would you rather have $1 million or $50,000 guaranteed for life? And I asked this question yesterday to a couple of people, and between a husband and wife, One said, I'll take the $1 million. The other one said, I'll take the 50,000. It's one of those things that income is important. Bills come every 30 days. People want to know it's going to come. But again, if we have the nest egg invested right, it'll produce the income.
I think some of it is the confidence that you can invest it right. So I think people that answer 50,000 a year for life are not confident that they could manage that money in a way where they could get their 50,000 and not run out of money. Obviously, that's where we come in. That's what we do here, is get people to and through retirement.
And Randy, to your point about the misinformation on the internet, it is a valley of misinformation, and anybody can put anything out there on YouTube and claim that it is true. So I think that you really have to vet the source of this stuff, and that is good advice for anyone who is taking any information from the internet whatsoever, is just be aware of the fact that there is a lot of bad stuff out there. For years, retirees struggled, Randy, because interest rates were near zero. Now we're seeing higher yields. How does that change retirement planning?
We came through the zero interest years for a long time after Mr. Bernanke was chairman. Then we had Janet Yellen, and we had near zero interest rates. That's why we had really ultra low mortgages and things. And then in March of 2022, with inflation running wild, Jerome Powell came out and raised interest rates 14 months to about 5.25% from zero at the Fed funds rate level, right? So all of a sudden, CDs and things started paying 4% and 5%, and that was great for retirees, right? Because for so long, you got almost nothing on CDs, and everybody was like, yay, we get some guaranteed income. They love that. But now, again, with Kevin coming in, we're probably going to see, and we have seen, that interest rates have started to come down, and they really need to. While it was great for retirees to be able to put that money over there and collect those paychecks, it was not necessarily all that good for the economy in general. And generally what we say is, if the Fed is raising interest rates, probably not good for the market and business. If they're lowering it, probably is good for the market and business. So really what people are after is that, like Jake alluded to earlier, that steady income, because the bills come every 30 days. We still want to be diversified. We don't want to put all of our eggs in one basket. So interest rates are changing, coming down, and it's going to cause some things to shift here in the next few months.
Talking with Randy and Jake Floyd of Floyd Financial Group, and we're talking about current events here. 417-889-7233 is our telephone number. Hear anything that piques your interest? You want to get in and sit down with Randy or Jake here at Floyd Financial Group and have a one-on-one about your individual situation. It's not going to cost you a dime. There is no cost. There is no obligation, and certainly there is no judgment. We'll meet you where you are. Once again, it's 417-889-7233. Randy and Jake, I was thinking about inflation. It's slowed from the highs that we saw a couple of years ago. I mean, it was up to like 9% at one time, roughly about 2.6 right now. The prices went up certainly when inflation was elevated, but they just have not come down. And gasoline prices, I mean, if you've been there just recently, you know that they're up almost $1 in some places. What does that mean for someone living on retirement income? And how do we cope with something like that when the prices go up? Is there any sort of investment that you can make that will keep pace with inflation?
Generally speaking, looking back over our shoulder, I'm going to say this, and then I'll have some background on it. The best place to hedge inflation has always been the stock market.
Mm-hmm.
Now, while the market is a great place to grow money, it can be a horrible place to protect money.
Right.
Because we know we're going to have downturns, we're going to have bear markets that are going to come along. Still, I think something tied to the market, because there's ways today to get good returns tied to the market while reducing risk. So that's really the best way to hedge against that inflation. Now, some people say, well, Randy, how do you plan for retirement when inflation is 9%? And my answer to that is you don't, because nobody can plan for that. And there is no investing that we can really do other than investing in working for somebody else and collecting a paycheck, right? If we go out and spend our time, we might be able to manage that. But from an investment perspective, it's hard to manage for that. 3%, can we manage for that? Probably we can, but it's really going to hurt over the long haul. At 3% inflation, which is about where we are right now, maybe a little less than that based on the last few numbers we've gotten. At 3% inflation, it takes twice as much money every 24 years. At 2%, which is the Fed's mandate, it takes every 36 years, it takes twice as much money. So I think a couple things, and I alluded to this before, what we really have to do is get supply up in all areas. If we have abundance of supply, which we had all the way through COVID. If you remember, we couldn't even get to 2% inflation with zero interest rates prior to COVID. So if we can get the supply chain back and create competition, then we will drive prices down. I've often told the story, if I'm selling peaches or cantaloupes off the back of my pickup at the street corner over here, and every time I raise the price, I still sell out, when am I going to start lowering the price?
Never.
I'm not.
Yeah.
So as consumers, we can affect that too by being wise shoppers.
Well, Randy, let's talk about the market. It's been strong recently, and in the past couple of years, we had record highs. Should retirees feel comfortable about that, or everything that goes up usually comes down? Should we feel cautious? What do you think?
One of the things that we're always looking at in here, and there's a couple of categories we'll talk about here. Number one, if you are investing in growth stocks versus companies that are more mature and have been around for a long time, let's say like a Kraft Heinz or Walmart, maybe Costco, versus an NVIDIA, which is a growth stock and doesn't really pay a dividend and is in really, really strong growth mode. In fact, the whole AI segment. If you're looking at the difference in those two segments, you have to look at the price of the stock versus the earnings in a couple of different ways. Growth stocks are always going to be at higher multiples, and those more mature stocks will be at lower multiples. So to say it's a really risky time or we've gone too high in the market in general, I would say, no, we really probably haven't. On the AI side of things, we're just getting started. There are some companies that have matured, and yes, they pay a pretty decent dividend. Yes, they're doing fine, but their growth prospects looking forward are not what they used to be. I think overall right now, is the market price really high? It's a little high, but it's not way out in the stratosphere like it was back in 1999. The S&P 500 was at 47 PE. I think today we're probably in the mid-20s on price earnings ratio. So as we look at that, the market's a little high. Do I think it's got more legs to run? I think if we get this oil thing figured out, hey, it's going to be Katie bar the door. We're going to see some really good growth.
Randy and Jake, no secret that the 24-hour news cycle that we're subjected to right now is pretty busy with things that are going on around the world. Heard a commercial just yesterday on the radio. You know, with everything going on in the world, you need gold and silver. How should retirees really digest everything that's going on in the world? Should we react, or should we just take it with a grain of salt? What do you think?
Well, you know, discernment of things is really what you're talking about here. How do we really get to where we can think, well, I can believe that, I can't believe that? We have to remember this. You remember the old Woodward and Bernstein thing that Robert Redford and was it Dustin Hoffman? I think it was.
I think it was.
That movie with him. And a lot of the people listening will remember that. But what are reporters always looking for? They've got to find the scoop. They got to find the different angle because they've got to make it sensational.
Right.
And that's why on the Fox News channel, everything is red alert.
That's right. Breaking news.
Breaking news. That's right.
Right.
They have to do that to get attention. And does it work? Yes, it gets your attention. But again, like you said, to figure out what's really what, I think if you want to get underneath that, you're going to have to say, all right, let's look at, and I'll just say this. I really don't watch CNN. I'm going to listen to Fox. I'm going to do CNBC, Squawk Box, that sort of thing. But if I really wanted to get the other side, I would watch Fox and then I'd watch CNN and realize that probably somewhere in the middle is the actual truth.
Right. There is no really, I think, unbiased information out there, do you think? I mean, everybody's got some sort of a slant on it.
I think they do because they have their own axe to grind in some way. The thing that we look at, everything is cause and effect. Nothing just happens. Somebody caused it to happen, or something caused it to happen. So I'm always looking at, okay, what's the angle on that? And why would they be saying that? And let's get underneath that and see if that really is factual. Because there's a lot of things that, you know, I've been hanging around this earth here for 6+ decades, and I've seen a lot, heard a lot. And so I can go back and look at some scenarios before where, yeah, they tried that once before, and that turned out not to be the truth, right? So I'm trying to think what the latest, there was Watergate, there's Deflategate, and I'm trying to think what the last gate was I heard just a couple of days ago.
I don't know.
Anyway.
I can't keep up with it all. When was the last time there was unbiased news? Maybe Huntley Brinkley Report back in the day, or Walter Cronkite, CBS News, New York.
Right.
That's the way it is, That's
Chet Huntley, right?
Right, and David Brinkley.
And David Brinkley, yeah.
That was on NBC, and then Uncle Walter was on CBS, and that's the way it is with Walter Cronkite, CBS News.
Yeah,
and there was one time, though, during the Vietnam War, I think that he did break a little bit and said, this reporter's opinion, this war cannot be won. And I was really shocked to hear that, because the first time,
was he right.
Couldn't we be won? But I think that was the last time. There's so many cable channels out there. They've got to fill time. If you're on the air 24 hours a day, 7 days a week, you got to have a lot of content, and there's a lot of competition. So everything you do has to be breaking news.
Let me throw this out right quick too. So all of the stuff that's going on around the world, you would think, and there's still the headlines, and then there's a lot of stuff going on that really doesn't make headlines. There's still a lot of junk around the world in many different countries right now. But if we sit back from a financial perspective, we look at all that's going on, and the market has almost gotten to the point to where it's not responsive to all this, what I would call knee-jerk reactive stuff.
Right.
Because at the end of the day, if companies are making their top number, meaning their revenue, and they're producing their bottom line profit, which makes the price earnings ratio look good and right, investors are going to invest their money. And we know there's still $6 or $7 trillion hanging around out there in cash, in money markets, checking accounts, and CDs. So as interest rates come down, it's going to find its way there. But again, if companies are performing and they're making their numbers, markets are not going to change that much. In fact, they're going to probably continue to grow because there's so much cash in the system. And so that's why we're seeing that the market is continually trying to hit new highs. We were at 7,002. What on the S&P probably 3 months ago, it was at the high right there, I think. We've been hanging around between 6,750 was the low, I think, and 6,900 all during that time. And so if we get the oil thing figured out, we get Venezuela online, we get Cuba going, and man, if we could get this Iranian thing figured out, get oil prices down, I'm telling you, the market and business is ready to soar. I'm just waiting and ready to watch it go and see the S&P hit new highs.
Well, Randy, a lot of great information today. We do have a finite amount of time in the radio, so we'll move on here. Financial headlines can be confusing, but understanding how they affect retirement planning is critical. If you're listening today, you're within 5 to 10 years of retirement, or you're already retired. This is a time to make sure your financial plan is truly built for the next phase of life. Because retirement's very different from the years when you were working and saving. Now the challenge becomes turning what you've built into reliable income, protecting it from market volatility, managing taxes, and making sure that your money lasts as long as you do. So if you'd like a no-cost, no-obligation retirement review, here's what you need to do is call 417-889-7233 and request your Floyd Financial Group retirement review at no cost and no obligation. Again, that number, 417-889-7233. Absolutely no pressure, just a chance to get a clear second opinion on your retirement strategy. So take a couple of minutes, make the call, get the answers you deserve about your retirement. It's 417-889-7233. Time for a break. Randy and Jake, we come back here on Show Me the Money. We're going to be talking about spring cleaning your finances when our program continues here on 104.1 FM KSGF, where Springfield comes to talk.
Ready for another helping of some more real money talk? Thought so. Now, here's another serving of Show Me the Money with your hosts, Randy and Jake Floyd, with Jeff Shade.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to be talking about spring cleaning your finances.
And Randy, most people are doing some spring cleaning around their homes this time of the year. When you were a kid down in Bradleyville, Randy, did you take the couch and the furniture out there in the back porch or out in the front yard and just sort of beat it with a stick or something?
Yeah.
Did that ever happen in your house?
My mom was kind of a clean freak.
Yeah.
In fact, she would pledge the floors, and we could slide on them in our sock feet and go around the corners. But you had to be careful because she had throw rugs everywhere, and if you messed up the fringe, you were in trouble.
Oh, yeah. But there are some people who do that. I know down in the hills and hollers of Tennessee, where my mom came from, they would take what furniture they had, and they'd put it outside in the front porch, and they would just do a cleaning, and then they would beat the rugs outside and bring them back in. But anyway, cleaning out the closets, fixing gutters, organizing garages. But you say spring is also the perfect time to clean our finances. Randy, why
Absolutely.
is that? How do we do that?
Well, you got to have a starting point at some time, right? So all we're saying is whether it's spring, winter, summer, fall, or all the above, the thing that I would say about this, the first step is review what you actually own.
Yeah.
All right. So number two, and I'm going to round this out, look for chronic underperformers, evaluate fees and expenses, and simplify where possible. Now, here's the thing I want to throw out to people right here. That's quite a task, actually, when you start thinking about all those things. But guess what Jake does here on a daily basis?
What does he do?
He reviews what we actually own. He looks for chronic underperformers,
Really?
evaluates fees and expenses, and simplifies where possible.
Sometimes even while we're doing this show,
That's
I
right.
stand up and walk over there and I'm looking at things and people are like, how do you manage all this? A lot of it is just a lot of time and effort. And I think that most people in retirement don't want to have to worry about what's going on the other side of the world while they're trying to sleep.
Yeah.
Or while you're on vacation,
Yeah,
you don't want to
exactly.
be the one guy whose wife said she wasn't going.
If you're going to do this, I'm not going. He's got the satellite dish in the top of the van there or the motorhome, and she
Right.
said, if he's doing that, I'm not going on vacation. But I think that's something that I wanted to bring up that a lot of people don't realize about Floyd Financial Group is that you guys are really looking at what's going on in the world on a daily basis, on an hourly basis. These are not
Right.
knee-jerks, though. You're really looking for opportunities, aren't you?
Right. So, the thing that's kind of different about us, I say kind of different, that is exactly different about us many, 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 many times. In fact, even when you're taking classes, when you take the Series 7 or the Series 6,
Yeah.
one of the things it'll say before you go out and get your license to actually be an investment advisor, it says, hey, pick a good mutual fund family that you like and stick with it.
Right.
So what happens is the advisor is farming out the management of people's money to that guy or those guys in that
Right.
case, because there's generally 2 or 3 managers over there. So what we prefer to do here is to stay in lockstep with what's going on with people's money, understand what's happening, and understanding the growth perspective and where to go find it. We're doing that on a daily basis here rather than farming it out. People have told me, well, when I went to see my guy, he just said, this is what we're doing and we're sticking with it, right?
Yeah.
Well, I think people need a little bit more than that. I think they need to understand why we own what we own, how much of it we own, what's the crossover, because sometimes people can choose 2 mutual funds that replicate each other so closely, or in sometimes completely combat each other. You got to be careful. You got to make sure you get to, if you have a horse on both ends of the wagon, you're probably not going very far.
No.
Right. So, everything has to work in sync. And I think
Yeah.
it's really important that people know that we're doing that here in-house on a daily basis and have for many, many years.
Yeah, and I don't think a lot of people realize that many financial advisors do just that. They're not actually making the decisions in-house. They're taking the information, then they're sending it off to somebody else in another city, and those people are really making the decisions. But I've been very impressed that that's what you do here at Floyd Financial Group, is that you're managing your own money in-house. Talking about spring cleaning your finances with Randy and Jake, you talk about rebalancing portfolios here in the spring. Why is that so important, and should we rebalance only in the spring, or is this an all year round type of thing?
So, it is an all year round type thing. There are some people that tried to simplify it a little too far, and that was every 30 days we're going to rebalance. And I'm not saying that that's a horrible idea, but what I would say is sometimes that makes sense and sometimes it doesn't. Sometimes it needs to be more often. Sometimes maybe not that often at all, depending on what's going on and what the volatility politically is, what's going on with interest rates, what's going on with inflation, and all those different things really changes it. And people say, well, why do we have to rebalance? If you've set it up the way it should be, why would we ever have to rebalance? Let's say we have technology sector, we have finance. Of course, we have 11 market sectors in general. If one of those sectors grows a lot and gets out of balance from where we started, we need to pull that balance back right into alignment. And we do that by selling off in certain areas and buying more in other areas where maybe that's been sold off a little bit too much, and those stock prices might be a little bit lower at the time. So the long and the short of it is all portfolios need to be rebalanced, but to say it's on a regular time basis, you need to be looking at it, yes, but it's not like it's every 30 days or every 2 weeks or every 6 months. It's really as needed. And the only way you're going to know if it's needed or not is you got to be watching.
That's right, Randy. And a lot of people change jobs multiple times in their careers, and we're talking about cleaning out clutter. What financial clutter does that create when you change jobs so often?
Oh, yeah. People leave behind 403B accounts, 401k accounts where they've been working with an employer for many years. And I had one guy one time, and this is really incredible. He came in, he sat down with us, he brought all of his stuff, and we looked it over, and he had a big stack of stuff, and we got all done. And he came back and he said, so what do you think? I said, well, I think we found an extra $80,000 out here that you didn't have listed.
Wow.
And he goes, well, that's not possible. I said, well, actually, I believe that it is, and we're going to call him and see. And sure enough, the money was there. So does it happen? It absolutely does. And what happens is sometimes as you move on to a new job, you change your address, and somehow the employer stops reporting to you. Maybe they don't have your current address if you've moved a couple of times, and all of a sudden that money's hanging around out there and you really don't know where it is. So it happens once in a while. So always try to keep track of those sorts of things, because the record keeping can get away from you if you aren't careful. And it's something that most of us don't like to do, right?
No, I don't like to do that, but I would be pretty interested in finding $80,000. I mean, I forget, here's 5 or 10, but $80,000, how do you forget that you had $80,000, Randy? How did that happen?
I had one lady that had 22 bank accounts.
Oh, my gosh.
She said, I just don't have any money anywhere. And she ended up having like $220,000. So anyway, there you go.
Yeah, some people save money and rat hole money and save it and move it around and save it. And you can lose track of it if you do that. I've had people well into the 6 figures of money that we have found.
Oh, my gosh.
Where people... I'd like to wake up and find $800,000 one day.
Oh, I'd love to do that.
I think that'd be great.
But I mean, 22 bank accounts.
Again, we're laughing. I have actually had somebody find $800,000 during the discovery process.
Nearly
before.
created a divorce, right? He says, honey, if you don't get these hundreds out of the way out of the bed here, I'm going to divorce you.
I think
like hoarders,
Honestly, it's a testament to how those people view money. They save it and then they pretend like it doesn't exist. They don't go, well, my car broke down or whatever, so I'm going to go raid my savings. Now I'm going to figure out a way to absorb that. And because of that, you wake up with millions of dollars one day. I say it like I'm picking on them. I'm not. My hat is off to these people that are able to.
Me too.
I mean, I do think there's a balance, right? We don't want to not live our life. But at the same time, this person I'm talking about is absolutely living life. She just saved and saved and saved and saved and saved and saved. And we found a whole bunch of money that she didn't realize that she had. Maybe if you come in and see us, maybe we can find some money you don't know you have.
Yeah.
And sometimes people just don't realize. About 15 years ago, I remember this. We had this one lady. She said, my dad left me and my sister this thing called an annuity contract. You know what that is? And there was $740,000 in it.
Oh, my gosh.
I said, yeah, we know what that is.
That's a good point, though, is that come and see us at Floyd Financial Group. We might be able to find you some money.
Well, full disclosure, I wouldn't expect to find $750,000 if you're listening to this show. But
not everybody, of course.
It does happen. And sometimes we just want to be able to bring value to your situation. We want to provide good advice. Sometimes what we do is just simply help you avoid the potholes that come with getting closer to retirement, into retirement, particularly if you retire early, meaning kind of before 65 years old. There's a lot of potholes that can jump out and grab you if you're not careful. I'm sure anybody listening to this show has been down a dirt road in the Ozarks. If you drive down the same dirt road a lot, what you'll learn is that some of the potholes are not a big deal. And then every once in a while, you'll hit a pothole that is a vehicle ender. Right? And you want to make sure that you avoid that pothole. So our job at Floyd Financial Group, in an analogy, is to say, hey, these potholes are not a big deal. We can just bump through these ones. But that one over there, you want to really watch out for.
Yeah.
And I think that's more or less what we do on a daily basis
That's
here.
true.
Now, it's a vast oversimplification. But what we want to do is just get you safely to your destination.
Well, avoiding potholes is very important when it comes to your retirement planning, and I'm glad that you guys have got your eyes open for that. We're talking about spring cleaning here with Randy and Jake Floyd at Floyd Financial Group. Randy, when someone hears all this, it may sound like a lot. What do you think is the big takeaway here about spring cleaning?
I think the big takeaway probably goes back to those first 3 things we talked about. Realizing actually where you are, what you actually own, looking at what could I do differently, maybe that would save me some money or maybe make me some more money. I'll tell you recently here, one of the things that we've done quite a bit of work with, we've been doing a money class through a church thing, and there's this thing called Rocket Money. And Rocket Money, at first glance, seems like it's just a problem and you wouldn't want to do it. But really what it amounts to is it helps you categorize all of your expenses and helps you to track all those things. And you'll find some interesting things if you go through and do that. And I think that's part of it, is just really being aware of what's going on, where your money is really going. Again, just being aware of what's going on in life. Sometimes you can just get in a groove and you're just running along. And then all of a sudden you'll wake up and go, wait a minute, why am I doing that? And why am I doing this? And why am I doing that? Right. So I think it's just taking an inventory and making sure you're on the track you want to be on.
Right, and Rocket Money is not a sponsor of ours, but it is a good application that you can find some money that you're spending that you don't know about. Myself, particularly, I noticed that I had several Netflix subscriptions. I've got subscriptions to magazines and things that are online that I never use, and they just come through the bank account. You don't really notice them because they're not big numbers, but nevertheless, when you add them all up, they can be a big number. talking with Randy and Jake Floyd Financial Group. Folks, if today's conversation made you realize that there may be some financial dust in the corners of your retirement plan, right now is the perfect time to clean it up. Maybe you've got some old 401ks scattered from previous jobs, investments that you haven't reviewed in years. Maybe you've got 22 bank accounts that you forgot about. Beneficiary forms may be outdated, or you're just not sure if your portfolio is properly positioned for retirement. If that's you, call us here at Floyd Financial Group. We'll help you clean up your financial spring cleaning tasks, and it's not going to cost you a dime. 417-889-7233 is our telephone number. You can make that call right now if you want. Leave your name and number. Ashley will call you back during the week and set up an appointment for you to come in and sit down and talk with Randy and Jake here at Floyd Financial Group. It's 417-889-7233. No cost, no obligation, no judgment. We'll meet you where you are. Randy and Jake, time for a break. When we come back here, I'm going to be talking about 5 smart strategies to create your retirement paycheck without the stress. When Show Me the Money continues here on 104.1 FM KSGF, where Springfield comes to talk.
We're back with your financial catch of the day, and it's a big one. Here's more Show Me the Money Radio with your hosts, Randy Floyd, Jake Floyd, and Jeff Shea.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money. And in this segment, we're going to be talking about 5 smart strategies to create a retirement paycheck and leave off the stress.
You bet. And Randy, one of the biggest fears that people have about retirement is this. During their working years, they receive a paycheck about every 2 weeks, but when they retire, that paycheck disappears. Suddenly, they have to rely on investments that move up and down. How big of a psychological shift is that for retirees?
That is a huge shift. It's one of the biggest, I would say, because what happens is people have been used to getting a paycheck. They've been going out and performing their job each and every week, and they're knowing that paycheck is coming. And all of a sudden it's like, I'm not working anymore. I kind of enjoy this, but where is my money going to come from? And yes, they may have a great big 401k over there that they've been saving in for the last 40 years, but they really don't know how to equate that to what it's going to produce as a paycheck. In fact, just yesterday, I had this very same question asked to me in a meeting, and I've got this nest egg over here. So what does that really mean to me? And this was an interesting question. And I ask this sometimes. I said, well, do you want to spend some of the money and let your money grow? Do you want to try to spend exactly what your portfolio earns? Or do you want to spend it down so your last paycheck bounces? And the lady goes, that one.
That one. I like the last one there. I like the bouncing paycheck.
That one. I like that.
Yeah.
So anyway, it's one of those things that it's a question that needs to be explored. And so we go through our 5-step process. Step 1 is discovery here at Floyd Financial Group. And that's what we want to do, is learn what people have saved, what retirement means to them, how important income is, or how much income they're going to need to support the lifestyle they want. Do they want to spend more early? How does all that come together? Yeah, I mean, that's the big thing, is how do we replace the income and how much are we going to need?
That's exactly right. And you will not know how much you need until you do the discovery process. And I think a lot of people underestimate how much they need. They think, well, I'm in retirement, I'm going to spend a lot less. But in reality, it's almost the same. So let's talk about building a reliable paycheck here in retirement. Some people may try to use a bond ladder. What is that, and how can it help retirees create predictable income? Or how do you feel about it? Should we really use the bond ladder for this?
Yeah, so the bond ladder's been around for a very, very, very long time. And basically all it amounts to is you buy different maturities, spend some of the money now, some of the money later, hopeful that you're going to gain more on the back end on the longer bonds than you do on the short bonds. There's also a bucket strategy that sounds very similar to this, where we can use different buckets. We can use bonds, we can use stocks, we can use annuities, we could use real estate. There's all different types of things that you can use. But generally, bonds, when you invest, stocks you can buy and sell pretty easily and come out fine. Bonds are pretty interest rate sensitive. And so sometimes when interest rates are falling, your bonds can be worth more. But when interest rates are going up, your bonds get devalued. So it's part of a long-term planning process, but I would say that we don't ever just need a bond portfolio necessarily. What we want is we want to do a well-rounded portfolio with many different asset classes. But the biggest advantage I think that bonds give people is they're typically fairly stable unless we have, like I said, rapidly changing interest rates.
Randy, another strategy that people use is delaying Social Security. I think that we have pretty much talked about whether or not Social Security is going to be there for people in the future. I think we decided that it will be there. It just may be a little bit different. But let's talk about delaying Social Security. Many people retire before age 70. How do they cover that gap if they're delaying Social Security?
Yeah, that's a good question, Jeff. For most people, I would think in today's world, Social Security is probably somewhere between, on average, and nobody's average, right? So
Right.
I'm just going to say, if you look at the middle of it, probably 35 to 40% of people's income is coming from Social Security, and the rest is going to come from pension plans and other assets, 401ks and money that they have saved. And whether or not to take it at 62 or to take it at 70, where we maximize it, if you read most of the financial advice on the internet, they're going to say, wait till 70. Well, we may not make it till 70, or it may be that we need to retire at 62 because of a health problem or something like that. There's no ideal age for which to take Social Security, except that I would say that if you're going to continue to work, obviously you don't want to take Social Security because you'll have to pay some of it back if you make more than about $24,000 a year on the side from earned income, not investment income, but earned income. They will have you pay some of that back. But, the other part of it, there's the emotional side of money. We always talk about there's two sides to this. There's the absolute dollars and cents of it, and then there's the emotional side. And I've used this story where my wife said, when you get ready to retire, we don't want to have any debt of any kind. I said, well, what if we got a mortgage at 2.9%? She said, I don't care.
Okay.
And so I said, yes, dear.
That was the right answer for you. Yeah, absolutely.
So there's many ways, though, to fund that gap. If you're going to continue to work part-time, maybe you will tap some of your savings a little bit early. Maybe if you're one of those fortunate ones that has a pension, you may be able to collect your pension at 60, or if you're in law enforcement, maybe even 55 or so to help bridge that gap and take Social Security later. Plus, then if you've got investments like CDs and treasury bills and things like that, there may be some ways for you to derive income there that will cover the income gap while you are waiting to achieve your Social Security number that you're looking for.
Randy, another piece of the retirement paycheck is dividend stocks. Why do so many planners like dividend stocks and include them in their retirement portfolio? And what do you think about them?
So dividend stocks, you have to be careful. Sometimes they are cannibalizing the company to pay you a huge dividend. And we've seen that over the year through many companies. Kinder Morgan was one way back, but there's been many, many, many companies that do that. Dividends are fine. As Mr. Wonderful says, it's the mother's milk of investing, is what he calls it.
Right.
It's the trickle-through income that you get. And I will say this, though. If you look back over our shoulder, the S&P 500 used to be almost a 4% dividend check. Today, the S&P 500 is around a 1 to maybe 1.2 dividend check. Well, it's pretty hard to live on 1.2%. 4% makes it a little better.
Yeah.
Of course, you get dividends, and then you get potential market growth with the dividends. So it's why they plug those in there. But I would say this, that there are better ways than just straight up looking for dividend-paying stocks. There are income funds and things today that make more sense, give us more flexibility, and actually more growth potential than just searching out dividend stocks. So if that's something you want to talk about, give us a call, because I think we got some really good information that you're going to love.
Randy and Jake here. We're talking about creating a retirement paycheck. Our number 417-889-7233. Of course, Randy and Jake with Floyd Financial Group. Target date funds are normally designed for people saving for retirement, Randy, but some advisors are now using them in reverse for retirement. How does that work?
The target dated funds, they say this, the younger you are, the more stock you're going to have. And the older you are, the less stock you're going to have. We're going to shift that more to bonds from a safety feature. The problem we get into with target dated funds is if you look at it strictly from that perspective, using that one metric, it doesn't take into account interest rate changes and volatility, which are crucial, as we just talked about, in the value of a bond, right, and how that works. And if you're way heavily invested in bonds while the market's on a terrific tear because interest rates are low, it just really mutes your performance. And so the target dated funds, I'm not a fan of, just because it only really looks at one metric, and that is what's your age, and that's how much you're going to have in stock versus bonds. So I think there's a big hole in that program, and there's better ways to achieve the same target they're trying to do, and that's to mitigate risk.
Randy, one of the most talked about topics in retirement planning is withdrawal rates. Instead of a fixed rate like the old 4% rule, some planners are now recommending guardrails. What do you mean by guardrails?
So, yeah, the 4% rule, if you go out there now, people are saying maybe we can do a little bit more, and we've been saying that here for a long time. Basically, what it amounts to is if markets do, really well, we can spend some extra. If they're not doing so well, we may need to fall back and reevaluate. But we want to do that within a set of guidelines that makes sense for people. So number one, we have to make sure that people always have the basics of life, what they need to live on. Then if we want to do some extra stuff when we have those really good years or have a good bull market run, we can extend and give them more income while being sure we're prepared for the future and hedging inflation in the future.
Talking with Randy Floyd here, Floyd Financial Group. We're talking about creating a paycheck in retirement here. So let's put it all together, Randy. So when you combine these strategies, what does the ideal retirement paycheck plan actually look like?
Yeah. So again, the most resilient plans are, we don't put all of our eggs into one basket. And, that comes from whether you're an aggressive investor and you want to be all invested in stock. We want to make sure that we're diversified and allocated properly, and allocations change, so somebody needs to be watching that. If you're a more conservative investor, we may need to look more at bonds or maybe some annuities that will give us a floor under our money or help us to mitigate risk while giving us the income that we're needing. Maybe some dividend stock would make sense. I'm not saying that they don't. I'm saying that there's other ways to do that. And again, the guardrail planning we talked about, let's go out and spend some money when, as my dad would say, let's make hay when the sun shines.
Yeah.
Right? And when not, you got to lay back a little, right? But just making sure we're diversified. We've got a good cash on hand plan for the emergencies that come up. If the roof leaks, if something happens to the car and you got to repair it, it's not a catastrophe, right? So just a good overall balanced, well thought out plan for retirement is what we're looking for.
Talking about creating a retirement paycheck without the stress with Randy Floyd here, Floyd Financial Group. Randy, let me talk to our listeners here for just a moment. Folks, if you're approaching retirement or you're already retired, the biggest question most people have is simple. How do I turn my savings into reliable retirement paychecks without worrying about the markets every day? That's exactly what the Floyds do here at Floyd Financial Group. Right now, they're offering listeners a no-cost, no-obligation retirement income review. In that meeting, we'll show you how to create a predictable retirement paycheck, how to reduce taxes in retirement, how to protect your savings from market volatility, and how to build a plan designed to last through 20 to 30 years of retirement. So to get yours, call 417-889-7233. Again, that number 417-889-7233, or reach out to Floyd Financial Group today and schedule your retirement income review online at floydfinancialgroup.com. Randy, Jake, time for break. When we come back here on Show Me the Money, we're going to be talking about an estate planning checklist when our show continues here on 104.1 FM KSGF, where Springfield comes to talk.
Ready to climb a mountain of financial know-how? Good, because it's time for more Show Me the Money with your financial Sherpas, Randy and Jake Floyd.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to be talking about the estate planning checklist.
Randy, most people know that they should do estate planning, but it's something that many people avoid because it forces them to think about illness or the end of life. Why is it so important to deal with these issues while we're still here on the earth and while we're still relatively healthy?
So I will tell you the thing that bothers me the most about this whole topic is it would seem that things should be pretty simple at the end of life and everybody should do the right thing and everything gets passed down just the way that it should. But here's the problem. As my grandma used to say, everybody has opinions, like they all have noses and they're all different, right? So it doesn't work that way. We need to make sure that we have spelled out what needs to happen or what we want to happen so that it does. It's not going to happen just because we want it to. So a lack of planning creates confusion, conflict, delays your family getting their money or their inheritance. So let's just go ahead and let's lay it out and make it easy for people to know how things are going to go, and everybody can feel good about it.
Right. If you don't plan ahead, someone else may be making those decisions for you, and you certainly don't want that. So let's start with one of the most important areas, Randy, and that's medical decisions. What should people do to make sure their wishes are followed if they can't speak for themselves?
So we have this thing called a power of attorney, and there's two types. There's one for healthcare, and there's one for finance. So when we're looking at someone that's going to be our healthcare proxy or our medical power of attorney, we want to make sure that it's someone that, this is going to sound horrible, that has compassion and empathy.
We would hope so.
And the reason it's funny is because...
Especially if they're your beneficiary.
Yeah. That's right. Because, they can pull the plug.
Yeah, I think it's time. Boom. Okay.
Literally and metaphorically.
Show me the money.
Yeah, that's it. Exactly. The other thing is, and we have this happen, and I think it's probably okay. It makes sense sometimes to have the same person be the power of attorney for finance, that durable power of attorney we talk about, and the same for healthcare. But sometimes it works out to where, us guys tend to be a little less empathetic and a little less emotional than maybe our sisters, right? So maybe the sisters need to be in charge of the healthcare and the guys need to maybe be in charge of the money. I'm not saying that that's the way it should be in every case, but it's something that you need to consider when you set these up and make sure that it has in writing in there what you want. Do you want to be resuscitated? Do you not? How do you want to be treated if you've got an illness you're not going to recover from? All those things come into doing that healthcare proxy.
I think you're right, Randy, but I have to say, I just can't believe you have the gall to say something like that in 2026. I mean, can you imagine the backlash we're about to get here?
When I go to the doctor, they always ask, do you have a living will or medical power of attorney? So it must be important, but that is number one. Number two, another important decision is choosing the executor of your estate. What exactly does an executor do, Randy?
There's really a couple of titles here. The executor is generally when we're dealing with a will or some type of pay on death or a transfer on death sort of thing like that, right? So again, when we're looking at doing an estate plan, maybe with a trust, that's going to be a trustee that we're talking about. And they both kind of have the same function. They help manage the distribution of assets, the gathering of assets, the selling of real estate, the transfer of all those assets to the appropriate places, working with banks and all those sorts of things. So, the biggest thing is with the power of attorney for healthcare and finance, the trustee needs to be, are you ready for this? Trustworthy. So thus the name trustee.
Right. You've talked about probate before and wills going to probate with the state of Missouri. You've also said that it's like filing a lawsuit against your kids. What do you mean by that?
Well, it is. If you go to probate, everybody has to be drawn through a knothole backwards, as my dad used to say, and that's never fun. Mm-hmm. But it's just so much more complex. You have to publish in the paper what's going on, and somebody has died, and wait for people to come and make claims and all that sort of thing. We want to try to keep all this as private as possible and do it with the trust is going to say, hey, here's the beneficiary, and here's how we transfer it. It's easy to transfer. So it's better to do it through an estate plan that's been arranged than trying to let people just kind of figure it out on their own.
So, Randy, should everybody have a will and a trust or either or? How would you approach that? What would you tell people listening today about that?
So while I am not an attorney, we need to be clear about that. I've had a lot of dealings with estate planning over the years. The will is something that you need for what I would call personal property and things that don't have a title. Mm-hmm. Anything that has a title can be handled through pay on death, transfer on death, or a trust that spells out the beneficiaries and how that works. So everybody's situation is different. I would tell you that the best thing that you could do when you get ready to do your estate plan is take the time to sit down with an attorney. We happen to have Floyd Law Group, which is a separate business to Floyd Financial Group that you can use if you would like. Or there's many people around town that do estate planning. But I would say sit down and take the time to have someone that does it for a living help you to understand what caveats there are and what things can happen. So the answer to the question is, yes, you need a will. But you probably need more than a will, because if all you have is a will and you haven't done any beneficiary designations, you're going to end up in probate. And in the state of Missouri, that's about an average of 8 months.
Should someone really just get a will online? I mean, why wouldn't you want to do that versus coming in and sitting down and maybe drawing up a different will when you can get a will online for a couple, $300? Yeah.
So again, you don't pay for documents when you set up an estate plan. You have to have documents, and you have to have the legalities built in. And if anything, you want to have more of the legalities in the trust that you may never use than not have it, because it's better to have it and not need it than need it and not have it, right? It's kind of what I always go back to. Again, I think the best thing I can tell people is take time to go sit with somebody that does this for a living and let them help you decide what is appropriate for you and your situation.
Talking with Randy Floyd and Jake Floyd here at Floyd Financial Group. We're talking about wills and trust and estate planning. And again, there is Floyd Law Group. We can handle that right here in-house for you. What about financial decisions, Randy? If someone becomes incapacitated, who manages their money?
Right. So it's going to be, if it's the power of attorney that they're operating under, the power of attorney will do that with probably some sort of an RIA firm like a Floyd Financial Group or somebody like that. If it's under a trust, the trustee, when that person becomes incapacitated, can take over and manage IRAs and that sort of thing for them. And of course, any outside brokerage accounts, real estate, anything else that's got a title to it. Again, the will is going to deal a lot with non-titled assets. So jewelry, the collection of 25 Rolexes that you have.
25 Rolexes, yeah. Sure.
But anything that's not titled, the will is going to work over that. And that's really all you want it to work over. And, you can develop lists that go along with the trust, sometimes a personal property inside there as to who gets the ruby red brooch over there and who gets the Submariner and
Right.
who gets the Porsche, all that sort of thing.
And a lot of older people, they got this old dark furniture. It's heavy. Nobody really wants this stuff. But still, I guess it's got to go somewhere. Maybe you can just say, hey, if you don't want it, send it off to Goodwill. But I know there are family heirlooms and things too.
Oh, yeah. In many cases, too, what ends up happening after everybody's kind of, this is going to sound horrible, once they've kind of picked over what they want. And
right, picked over like a vulture.
You just have a public auction.
Yeah, I've known many people who have done that, but I don't think the old Porsche is going to go in the public auction. There are going to be a few takers for that. We have talked about a need-to-know file or a locator list. Have you had anybody come into the office and unexpectedly a spouse has died? Let's say that the gentleman in the family has passed and he didn't leave any passwords. Nobody knows where anything is. That can really create quite a problem.
It really happens all too frequently, actually, where people come in and they say, my wife or my husband always did this. I don't know anything about anything.
Wow.
And so we always just tell them, go into your stack of mail and bring us everything that comes in for the next 30 days and we'll kind of figure out where you're at. And then if you've got other things in files around the house that you question what they are, bring those in. But yes, it's a good idea to have a box where everybody knows where everything is, have a file system. I mean, my wife is meticulous about this. She's very good at all this sort of thing and has it lined out to where you could walk into her office right now and open a couple of file drawers and you would know everything that you would need to know about us as far as what accounts, what credit card accounts we have, if we have any loans, if we have cell phone bills, all the internet bills, all those sorts of things are all pretty well categorized in there. And she even has a book that she keeps locked up that has all the passwords to everything you need a password for.
All right. And hopefully she's left the key if she's got it locked up there, too. It doesn't do any good.
I guess if we can't unlock it, they can blow it up. Right?
Yeah, I guess so. But you talked about mail. The only mail we get anymore pretty much is junk mail. Most of the bills come electronically. So that's a little bit different thing, too. These usernames and passwords are so terribly important. So this is something that unfortunately is really overlooked quite commonly, isn't it?
Yeah, it is. And again, just so for everybody to be on the same page, right down to funeral planning is important. When my mom passed away, they had not done any planning. My mom was 81 when she passed away, but I went with my sisters over to the funeral home and they took us back there and they opened the door where all the caskets and things were. And up there on a big banner, it said mother. And there was this big gold casket up there and it was $10,000.
Oh my.
And they started gushing. It was all over, right? And then we had to sit there and work through that and do all the planning and things. And it worked out fine. But then when my dad died, my sister Carol comes to me and says, hey, why don't we go ahead and do some planning here ahead for Dad? So when we did that, it was always very easy and almost automated. And it makes it easier for people to go through the grieving process and everything rather than having to make all those decisions. Do them ahead of time. It makes good sense.
If someone is listening today, Randy, and they haven't done much estate planning yet, where do you think that they should start? What are the first steps?
Yeah, so I think number one, if you're already retired and this is something that's coming up, find an estate planning attorney that'll help you work through this stuff. If you're about to retire and you haven't done any of this stuff and you're going to come in to see us, we will help you to really organize and get a handle on everything that you need to address inside your estate plan so that when you go see that attorney, it'll be very easy.
It's been a very valuable conversation. Folks, if you've worked hard to build your savings and your assets, the last thing you want to do for your family is face confusion, delays, or unnecessary taxes after you've gone. That's why Randy and Jake here at Floyd Financial Group and the team offer a complimentary retirement and estate planning review for listeners of this radio program. In that meeting, they'll help you make sure that your estate plan is complete and up to date, review ways to reduce taxes for your heirs, coordinate your retirement accounts, wills, and trusts, and help ensure your wishes are clearly documented. Once again, if you would like some help with all of this, 417-889-7233 is our number to schedule your no-cost, no obligation, no judgment review. It will not cost you a dime. Once again, that number is 417-889-7233. You can also find out more about the firm online at FloydFinancialGroup.com. Randy and Jake, it is always a lot of fun to be with you here on a Saturday, but unfortunately, our time is up for this week. So for Randy and Jake, I'm Jeff Shade. Have a great weekend. We'll talk to you again next week right here with another edition of Show Me the Money on 104.1 FM KSGF, where Springfield comes to talk.
The information provided in the preceding program is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representations as to its completeness or accuracy. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Financial planning is offered through Floyd Financial Group, LLC, an SEC registered investment advisor.